Hi, and welcome to Chapter 11, Learning Objective 2, Preparing a Worksheet for a Merchandise Company. Okay, so new accounts are added as needed. So a little different, couple new accounts that we didn't have when we were doing the worksheet before. So we have sales returns and allowances, sales discounts, rental income, you have the cost of goods sold. And then, different expense accounts or liability accounts get added as you need them, like unearned rent. Is there any other ones? That might be all for this particular one. So although unearned rent is only termed under liabilities, not using payables, it is a liability, and cost of goods sold is an expense account. Okay, so we have our trial balance section of the worksheet. Should be relatively routine by now. It's listed in order of assets, liabilities, equity, revenue, cost of goods sold. Adjustment B, rental income earned. Now $200 has been earned. The liability is reduced and rental income can be recorded for the $200. Okay, so that would be our entry. We would debit unearned revenue, credit rental income. Adjustment C, I guess we didn't have an adjustment A. I'm like, okay, wait a minute, did I miss something? No, it looks like we just go from adjustment B to C. Supplies on hand were $300 because $500 worth of supplies were used. The entry that we need to adjust the account is $500. Our beginning balance was $800. And what was used is what we do our adjustment for. So we debit supplies expense. We increase our expense, $500, and reduce our prepaid supplies account. So we credit it, the asset, $500. Adjustment D, insurance has been expired or used. $300 has been expired or used. So we need to increase the expense, debit the expense, and credit reduce prepaid insurance for $300. Remember, every time we do an adjusting journal entry, we're debiting or we're impacting an income statement account, which in this case is an expense account, and a balance sheet account, prepaid insurance. It never goes against cash. Just an income statement account and a balance sheet account. Okay, so depreciation. Depreciation expense and accumulated depreciation are both increased by $50. Cost of the store equipment remains $4,000. So we are going to debit depreciation expense, increase the expense for additional depreciation recorded, and increase accumulated depreciation. So we're crediting that by $50. Adjustment E, salaries accrued. So the $600 in accrued salaries caused an increase in salaries expense and salaries payable. So we're debiting salaries expense, $600, we're increasing the expense, and crediting the payable, increasing the liability we have on the books. That these salaries are due, but we don't only cut our checks every 2 weeks, so we have this liability left on our account until it will be paid in the next month. Okay, so now we have our worksheet with our trial balance. We have our adjustment column, so we just post those entries. Correspondingly, add new accounts as needed down here at the bottom that we didn't already have in our trial balance. And then we put our numbers across where we have our debit. There's no adjustment here, so you just pull the debit across. For merchandise inventory, we had a debit of $19,000. We had an adjustment of $500. So you have a debit and then a credit. So your ending, it results in a debit balance of $18,500. So you should remember how to do that from, I think, Chapter 5. You foot The totals of your adjusted columns, they should balance, and then your adjusted trial balance should balance. Okay, this should all pretty much be review. Okay, now you take the sections of that adjusted trial balance and move them to the income statement section, which is, all your revenue accounts and your expense accounts. And then down on the bottom section, again, you have to look at your revenue and your expense accounts. Okay? They won't balance, but in order to get them to balance, you'll have really your revenue minus your expenses should be your net income or net loss to get your balance sheet in balance. And you do the same thing. You move the assets, your liabilities, and your equity accounts over to the balance sheet account. Okay, the ending inventory, 18,500, now becomes the beginning inventory of our wholesale clothing on January 1st. And down here is our net income number again that we have to use to get the account in balance, because that actually adjusts your retained earnings when you're doing your actual balance sheet. Okay, so here is your completed worksheet. And hopefully you're good to go and able to finish the last assignments and last tests. Good luck to you.